Ladies and gentlemen, welcome back to the Grammy-nominated and award-winning show, The Breaking Bitcoin Market Update. Hopefully you guys are doing absolutely fantastic today, wherever you happen to be tuning in from and wherever you are in the world, however you happen to be watching us, whether it's on YouTube, Trovo, Twitch, DLive, Facebook Live, or I think we're also on Twitter now. You can watch us directly on Twitter. We actually have just as many people watch us on Twitter, sometimes more, than on YouTube, which is interesting. So anyways, hopefully you guys are doing absolutely fantastic. It is a lovely day out here in colorful Colorado, and it's a lovely day in the markets. We're going to go through everything, explain everything in detail. I apologize for the brief, let's say, lapse in doing streams, just taking care of some personal things, working on some new systems, and we are back to full speed ahead, ladies and gentlemen. So just get the Bitcoin engine train going, and let's have some fun on the stream. Sound off in the chat. Let me know how you guys are doing today. What trades have you guys taken? If you guys are new to the channel, what we focus on here is systems trading. We focus on developing systems that can either be automated or traded manually. We also focus on cryptocurrency markets in general, price predictions, understanding trading, a little bit of technical analysis, but we tend to focus a little bit more on statistical analysis, volatility, trend direction, measurements, anything that can be quantified and translated into a system that can earn you money and hopefully get out from underneath the yoke of the wage slave occupation. So that's what we do here. A huge shout out to the supporters, to the members of the YouTube community, to all the premium members. And yeah, things are good. We are going to be having a sale on the courses and on the trading group services coming up here pretty shortly, but all that information is down in the description if you guys are relatively new, but most of the people here are not new. So huge shout out to the chat. We've got Jordan Stotts, Bird, I see Hardlight 1234, Alex 81SG, Mac W, and Ernest of Gaia in the chat. Southern Utah is nice as well. Good to hear that, Ernest. Yeah, it's you know, it's been a little rainy for the last few days, which has sidetracked some of my construction projects around the house. But yeah, tomorrow's probably going to be sunny and 75. So let's get right on with it. We're going to pull up the charts. We are getting closer. If you guys have been following the channel for a while, you guys know that I made an outlandish price prediction, right, of $25,000 for BTC several months ago. Well, here we are. Here we are. Things are good. Life is good. Kimozabi, good to see you as well, my friend. Interesting. And it's been a crazy month since we've done the show. I mean, we had the collapse of the Terra network, the collapse of UST, which has pretty much been the biggest story. However, there's been a lot more going on underneath the scenes. But overall, if this is your guys' first bear market or bear cycle, because I don't really think we could say that the flash crash in 2021, May of 2021, kind of counts when we dropped 50%. But we recovered from that so quickly and went on to form even newer highs. This is a little bit different. This is a pronounced bearish trend that we've had for the last 4 months now. And it can be difficult. If this is your first time going through a bear cycle, I just want to let you guys know that things do get better. Okay, this is going to be my 4th such market cycle, and I will tell you this. And I just posted a tweet about this earlier, so make sure you guys are following me on Twitter. If you're not, I am going to be posting there pretty much 4 or 5 times a day. Everything from technical analysis to inspirational quotes to information about trading and DeFi and anything that I find interesting and relevant. But I just posted there. This is the time where you separate, where the wheat is separated from the shaft, to quote the Bible. This is the time right now when the party's over, right? The lights are on, the cockroaches have disappeared, and all the kind of fair weather cryptocurrency enthusiasts, the people who are in it for the tech, the DeFi traders, the yield farmers, et cetera, et cetera, et cetera. They're nowhere, right? YouTube is a ghost town right now. Twitter is a ghost town, right? Twitch is a ghost town. So all these traders or investors or crypto, whatever analysts, all these people, they've disappeared. And the reason why is because the party's over, right? It's not easy. It's not so easy to make money anymore. When we're in a bull cycle in cryptocurrency, it's extremely easy to make money. Like you can be a donut and just buy at a market, at a market top. And if you're just patient, it'll come back up. The cryptocurrency markets are extremely forgiving, especially for people who are practicing account building strategies like Moon and Papa, for example. Shout out to Moon and Papa, like the kind that he promotes and talks about. Those are all fine. And those work well. All these strategies, any strategy works well in a bull cycle, right? One of the oldest adages is buy and hold, right? Buy and hold works really well. You just have to have a longer time horizon. But when you are a short-term trader, or when you are just kind of any kind of trader in a bear cycle, it's much more difficult to make money because what was working for you previously now is no longer working and might actually be working against you. Plus, on top of that, all your bags, I mean, they just feel like lead weights and they're holding you to the ground. But I will tell you this, because this is my fourth such experience, and I am telling you this from experience, things get better. Cryptocurrency is not going anywhere. The geopolitical issues will resolve themselves in due time, and we'll get into that a little bit later. I actually have some interesting insight into the current geopolitical situations that we have unfolding, obviously the situation over in Ukraine, and how that could be actually, I don't want to say this, obviously what's going over there is a crisis, but it could be good for asset prices depending on how things turn out. We are going to look today at a couple different possibilities and scenarios for the cryptocurrency markets and the general markets in totality, depending on what occurs over the next couple of months. And we'll also get my price predictions and where I think things are going to go. But overall, this is the time to buckle down and really focus on yourself, right? As an investor and as a trader, and to understand, to get an understanding, to get a comprehension of what you can be doing now that you can improve at, that you can get better at, that you can feel confident and comfortable in, so that when the market conditions turn from bearish to bullish, you are going to be optimized and primed and ready to succeed, to do well, all right? Just to do well, okay? If you were doing okay in the previous bull cycle, like back in 2021, early parts of 2022, and you're in a situation where you don't feel comfortable with your trading right now, go back and analyze what you were doing then, okay, and focus on improving that now, right? This is the time. And if you take the time now to improve the skills that will translate directly into the next cycle, you're going to do so well. I mean, you're going to do so well, right? Most people won't. Most people won't. Most people are going to leave. Most people are going to quit trading. Most people are going to quit the markets, and they're never going to come back. And it's always going to be this like, oh, well, I coulda, woulda, shoulda, blah, 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 the next time the bull market comes around. We're not them. We're not going to be them, and neither are you, right? If you're watching this video, if you're watching this channel, you are cut from a different cloth, right? Especially if you're watching this video now, right? This means that you're still here, you're still around, whether we're at the moment of max pain or whether there's still more pain inbound, okay? Again, not a wizard. We just have to trade off probabilities. But I'm telling you, this is the time to focus on developing the skills that will be with you for a lifetime, right? So if you're new to trading, or if you're new to this channel, this is an excellent time to subscribe, follow the streams, join the Discord, link up with some of the guys, and start building a trading system that is going to do okay now, and start building a trading system that is going to be optimized for a bull cycle when it comes, because it is coming. The bull is coming. The bull market is coming. It always comes. So yeah. All right. So with that being said, thank you guys. Obviously, just self-promotion here. If you guys enjoy the content, make sure to slap a like on today's video. It just makes me happy. Okay. It makes me happy, gets more people into the channel, and helps us do what we do better here. All right. With that being said, let's go to the charts and we'll start breaking everything down. Okay. Monkeypox Inu, man. Yeah, Monkeypox Inu. That's to the moon, man. All right, so we're gonna. I don't have a ton of time today, guys. It's already 4 p.m. where I'm at. It came on a little bit later today. We are going to be experimenting with maybe moving the stream to about 2 p.m. Mountain Standard Time, 3 p.m. Central, 4 p.m. on the Eastern Seaboard. Ideally, I would like to do the stream, like a little bit later in the evening, maybe after my daughter goes to bed. But right now, that would mean sacrificing my relationship with my girlfriend, and that's not something that I'm willing to do right now. So. We're going to experiment with doing the afternoon times. This way, I've done all my research and trading in the morning. I can do some afternoon trading, and then you guys will be here for the daily scan, right? So one of our primary strategies and recommendations to newer traders is to focus on building a daily time frame strategy for multiple reasons. One, it means you only have to trade once a day. It limits the number of positions that you can take, so it's a restricting boundary, and it's the best. It's the best time frame to trade. I mean, you can make very good money in a very calm and concentrated fashion, working a full-time job or having familial commitments or just other life commitments, and still be able to make consistent profit as a trader, focusing on that daily time frame. Of course, this is a concept that was popularized more recently in the Forex markets by No Nonsense Forex, VP over there, and then other traders on YouTube as well. But again, this is what we've been saying for 3 or 4 years now. So let's get on with the show. We are going to start with the chart of Bitcoin here. And we're going to go ahead and take bottom feeder off, and we're just going to focus on the naked chart for now. And I just want to focus on this current count that we have right now. If you guys follow the channel, you guys probably know that my most popular video is the TD sequential video. So this is a training video, an educational video on how to utilize the TD sequential indicator, created by Tom DeMark and popularized by other individuals as well. Probably most notably Tone Vase here for its application in cryptocurrency. So TD sequential was something that I was a little bit fascinated by, and Tom DeMark, honestly, his entire suite of indicators, that's what inspired me to become a trader. His book on philosophy of technical analysis is what actually really helped me out in my early days of trading. I don't really use too many Tom DeMark strategies or functions now, but they're still very viable, very usable. Very good indicators, very good concepts. So highly recommend, if that's something that you're interested in, just download his book. You can get the ebook for free, somewhere online, or you can just get it off Amazon. It's like 20, 30 bucks. Definitely worth it. Definitely worth it. The Introduction to Technical Analysis book by Tom DeMark. And there's a suite of fantastic Tom DeMark indicators on TradingView, everything from reversals to the TD sequentials to the counts. And I do know that the indicator that was featured in my video is no longer publicly available. It's JD Lim's. I still have access to it, but it used to be that you could just join his Telegram and request access and he would give it to you. But I feel like JD Lim has since moved on and I haven't heard from him in years now. So it hasn't been a common kind of complaint, but there is a couple not brand new, but newer, really good versions of the TD sequential on TradingView right now. So you can add those to your chart. Not a problem. But anyways, we have had now 1, 2, 3, 4, 5, 6, 7, 8, 9. This is going to be our 9th consecutive red week. So for the TD sequential traders out there, even though we could have already been in a count, that would be a 9 count. Typically after you receive 9, especially, right? 9, the Tom DeMark method, 9 candles for a TD count is a potential sign of a reversal on the close of the 9th candle. After the 9th candle, if we don't reverse, then we go into a countdown, which goes from 1 to 13, and a 13 usually reverses the market. And it's just interesting, obviously, here to see that like 9 weeks of red, if at the very least, we are just in a situation where we'd be looking for something of a dead cat bounce. We've got a lot of things going on here. We have the previous market lows. Okay, we've now swept those with a long wick and high volume here on the weekly chart. So I don't want that to go unnoticed. You guys realize that we did trade down to 25,000. Okay, 25,000 and bounced all the way back up to 31 within the span of a week. Okay, actually a much shorter period of time, honestly, but. So a little bit of a flash crash right there, a little bit of a large wick to the downside. And 25 was pretty much the conservative target that I gave for downside potential for BTC USD. Now, that number actually comes from my EMA script. So the 200 weekly simple moving average has been the rock bottom, not the rock bottom, but the bottom for Bitcoin's price action for all of the previous market declines to the downside. Stretching all the way back to 2015, we can see that after we peaked in 2013, we entered into a 2-year-long bear market and we did bottom at what would then become the 200 weekly simple moving average. Following a little bit of consolidation at the 200 weekly simple moving average, we then rose to reach that high of $19,900 in December of 2017 before collapsing all the way back down to about the $3,000 range in the 2018 bear market. And kicked off the beginning of the new year in January with a the best opportunity in the last 4 years to purchase Bitcoin at 3,500. And if you would have purchased them, you'd be very happy right now. Also, notice that the crash in 2020, also at the 200 weekly simple moving average. And we are descending ever and ever further into the bowels of El Diablo. I mean, closer and closer to the weekly simple moving average. Now, that number is... Let's open up the data window here. So that number is $22,069. All right. So that is what the exponential moving average, the simple moving average is calling for the buy-in price for BTC USD. So reaching a price of $22,000 to me is a no-brainer for a buy-in or an entry into a spot long. I would not be recommending leveraged positions on a macro event such as a turnaround like this for multiple reasons. One, obviously leverage entails much higher risk, much higher loss potential. But when we're looking at something like BTC USD, that is kind of a situation where when we reach those rock bottom prices, we can begin adding to or expanding our portfolio, our holding of spot BTC USD. We can then use that spot BTC to begin using, instead of the USDT margined contracts like we use when we trade futures currently right now, which is my recommendation, to a BTC margined contract, so that we can earn more BTC and use our BTC as collateral, and our collateral is earning as the market moves to the upside. Now, I've seen some funny things here on Twitter lately and on YouTube talking about, I think we're due for about a dead cat bounce to about 60,000. You know what I mean? Now, I'm not calling for anything like that. I do believe that our next bull cycle will take us up into the, well, let's see here, the sextuple, triple, quadruple, pentuple, sextuple. I feel like sextuple 7, even though sex and 6, but anyways, we'll push us up into six-figure Bitcoin. All right, so 100,000. Now, we cannot predict like exactly when that will happen, exactly how quickly that will happen, with what volatility that will happen, what will be the situations or circumstances surrounding that. But the common thread here, and the thing to pay attention to, is this kind of fundamental approach to the markets that I have and many good traders have, many good investors have. One, as Charlie Munger says, patience. Patience is key, right? Warren Buffett, obviously, Charlie Munger's partner, says that the market takes from those who are impatient and gives to those who are patient, to paraphrase the saying. So understanding, and this is my recommendation for investments, you want to invest in something that you understand and believe in, okay? That you understand and believe in, okay? So Bitcoin is relatively easy to understand. If you don't understand it, you can simply go read Satoshi's white paper, which is available literally anywhere on the internet for free. Just Google it. I recommend following like Anthony Pompliano for, and there's other great people to follow as well, for insights into, I actually would highly recommend JW Weatherman, but that's neither here nor there, for some good insights onto what Bitcoin is for. But the point of investing is to buy something that you fundamentally believe is valuable, that you believe in the future people will realize is as valuable as you believe it to be. And that realization of those who come later than you is what moves the price up. And your reward for your speculation, your reward for transporting this asset from here into the future. You're a time traveler. Traders are time travelers. Your role is to take an asset here and now at the price that it's at, to buy it, to expend your energy, your time, your capital, and transport it into the future. You're a time traveler. Where others will realize what you are realizing now, but not as early as you did. Your reward is the difference in price that their realization brings to the asset. That is the role of a speculator. You are a time traveler. All right. Now, my fellow time travelers, it's not the easiest job, but a pretty good job once you get the basic fundamentals down. Bitcoin is valuable. Bitcoin will be more valuable in the future, and we will be rewarded for our speculation. Okay, that's it. But you can't play for free. Okay, you can't get a reward. You have to have skin in the game. You can't get rewarded without investing capital. You have to invest your time and money into the situation, whether it's your job, whether it's your relationship, whether it's your family. If you do not invest your time and energy, if you do not sacrifice your most precious commodity, your time, you will not be rewarded. You have to sacrifice your time to get rewarded. Okay. So might take a while, but here we go. So if history repeats itself like it has since 2015, then we will see the market bottom out somewhere in the vicinity of 22,000, which will open up a great opportunity to begin adding to. You can either, I don't recommend going all in. I always recommend dollar cost averaging, especially when we're talking about long-term investments. For our BTC position here. And then you can make a shift around that time. You can either wait for price action to confirm. You can either wait for your indicators to confirm that the number is now going up and we've kind of bottomed out. Usually, it would probably take a month or two of consistent uptrending for anyone to be extremely confident that the bottom is in. And even then, you'll still have some stragglers and hangarounds like, oh, the market's going to tank. It's, we're going to turn around any minute now. Like, meanwhile, they're missing the beginning of the bull trend. You can wait for that confirmation to then make that shift from the USDT margin contracts into the BTC margin contracts. You can also, of course, just stay in the USDT margin contracts for your active trading while you keep your kind of Bitcoin long-term position separate. That's totally fine as well. And you know, it's just going to be a different approach for everybody. You know, for the last year or so, I have not really used any inverse perpetual contracts, even in the depth of the bear market, or even in the depth of the bull market. But, you know, I realized that I could have, you know, expanded my gains much more by doing that, which is honestly how I expanded my gains in the previous bull cycles in 2017 and 2016 with BitMEX. So just something to consider. If you guys have any questions about that, leave them in the comments, ask them in the Discord, and maybe we can touch on that concept a little bit later. I have talked a lot about USDT versus BTC, but, you know, I feel like it's a new year. You know, we're already halfway through the year now, but, and, you know, we're really restarting a lot of things around here that we weren't doing previously in the past. So I'm going to be refurbishing like almost all of my training videos. So I think that would be very helpful moving forward. So let's take just a quick second here and look at the chat here, guys. Juan Julian Vallejo Cervantes, good to see you, my brother. Mac W Cockroach of Wall Street. Monkeypox Inu, $400 million rug pull yesterday. A lot of weeds out there still. No, I feel you, brother. B-Flow, good to see you, my brother. Mac W, 8 off the break. Septuple. Okay, yeah. Septuple is 7, sextuple is 6. Thank you very much. 555. Sept is French for 7. Oh ho ho. Oh ho ho. Kimozabi, also sacrificing your sanity at times. Yeah, that's just life. Like, life is inherently you know, life is at a fundamental level. Life is this kind of dance between chaos and entropy. It's a trip, man. It's a trip. That's just the fundamental nature of life. So anyway, sorry, I've got this display window open, so let's just close this a little bit. So anyways, we've only got like 20 minutes left, so let's we probably take a little bit longer, but Andrew Munns, good to see you, man. Hopefully you're making money in the markets today. All right, so that is the historical scenario. Now there is another possibility here, right? If we pull up instead of BTC, just a second here. If we look at the SPY, all right, we'll go to all, and we will look at the SPY. As you can see here, the SPY, unlike BTC, is quite a bit of ways from its 200 weekly simple moving average, okay? Which, again, just going back in the SPY's history, has been not as accurate as Bitcoin. Obviously, we have more time here. Here's 2010. And we did break the 200 simple moving average in the 2008 financial crisis. And then, of course, here is the dot-com crash right here all the way. That bear market lasted 3 years. This bear market lasted from 07 to 09, so 2 years. But since then, and one could argue, this is the argument, and I do want to address this, right? This is the most common thing that you're going to run into when you're having these kind of dinner table discussions, right? About like, oh, well, BTC isn't nowhere near the bottom, or blah, 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 blah. It's this concept that is popular right now, that it is due to, and this is true, it's not distrue, but we're going to analyze this with a little bit more thought than just reading a Twitter headline. That since the 08 financial crisis, it's really the 07 financial crisis, but since the 07-08 financial crisis, the Fed has had a very loose monetary policy that has inflated the asset prices, and that we're now in kind of the bubble of everything. Okay. There are a few situations in which, even though the Fed is beginning to tighten its monetary policy, that the idea that we're in this massive kind of stock asset bubble, that things can continue to move forward, that prices can continue to rise, not only on stocks, but commodities, everything. The reason being that, you know, again, I'm gonna forget his name. He did all the index funds at Fidelity. Let's see here. I want to get his name because I want to quote him correctly. Mutual funds. Peter Lynch. Peter Lynch. Stuck in traffic construction in Tahoe, so I figured we'd just watch some cracking cryptocurrency. So Peter Lynch said there's a really common thing to understand about the markets. Corporate profits go up about 8% every year, and the market goes up about 8% every year, right? He says about every 4 years, every 4 to 5 years, there is a 10 to 15% correction. And he's like, once every decade, there is a 20 to 25% correction. He's like, that's all you need to know, right? So if you, there is this, the way this is just one way that I view it, but I do feel as if, you know, one, I don't like to be afraid of things, like anytime anybody in my life has told me like, well, not only you can't do that, but that's more me personally, but just in general, like anytime I've seen people kind of doom prophesize or, talk about how things are just going to go from worse to bad to terrible, it never works out that way, right? It never works out that way. Like I do fundamentally believe that human beings are strong, intelligent, brave, and capable, and that we have, an arsenal of tools at our disposal, not even yet fully discovered, I have seen, keep it once every 100 years. I have seen, just some incredible things in my life. Things that I didn't think were possible. I've done things that I didn't think were possible. And overall, I've studied history, and we are on this logarithmic trend upwards, not only in culture, in understanding, in development, in technology, in ability, in being more and more human, I think, as a goal we're attaining continually as a species. And, I fundamentally think that if you long-term bet against kind of the underpinnings of capitalism, right, which is the capital markets, you're kind of betting against humanity. Now, obviously, things go down, and things can go down for quite a while, but we'll talk a little bit about the geopolitical stuff here in a little bit. But there are a bunch of scenarios. I think there are a bunch of scenarios in which things do very well. Sorry, just let me resize this window here. Using the SPY for an example, we are quite a bit of ways away from our 200 weekly simple moving average. So I do want to talk about the potential scenario in which Bitcoin does not stop at the 200 weekly simple moving average, right? So let's look at let's see what that would look like. Well, first of all, it would look like this, okay? It would look like candles below the 200 simple moving average. Now, it's important to notice that there has never been a weekly candle that has opened and closed, right? Remember that, opened and closed below the 200 simple moving average. We did close below the 200 simple moving average here. And you might make an argument that it happened here, okay? But it didn't really happen like on the 200 simple moving average. But here in this scenario, we had a massive, this is the March meltdown back in 2020 when BitMEX, basically killed everybody, just Harry-carded the entire market. And we immediately rebounded. Mean reverted back into the consolidation zone, and then began a bull trend, okay? Now, this candle is quite interesting right here. Look at the very long price tail on the weekly chart and the huge volume spike near approaching a level of historical support. So this is very important. And if we continue to see price really contract, volatility really contract and slow down, then I would at the very least be looking for some sort of dead cat bounce or bounce, maybe probably up to the 100 weekly exponential moving average. So back up to about 35. I would definitely be looking for that in the short term. If and when we get down here to the $22,000 level, I do expect a bounce at least. If it is a dead cat bounce, if we are going to be trading lower than 22, all right, in the situation where the SPY does mean revert all the way back down to the 200 weekly moving average, which is like another, 30% correction, and then some maybe, then we are going to be talking about a different thing that Bitcoin and the cryptocurrency markets have not experienced, right? We're going to be talking about a real risk-off bear market, okay? Now, recommendations, you have to have a plan, right? You have to have a plan for what you're going to do in these situations. You can't just be like, well, Justin said, we're going to stop at 22, so I'm just going to buy Bitcoin there, and then I'll just wait until we're at 120. Now, that might work, right? But there's going to be a lot of pain in the short term. But if that's what you want to do, you just want to buy at 22, maybe sit through a drop to 13 or 8, and then just wait out the rise to 120, that's perfectly fine, okay? But you're gonna be missing out on a lot of opportunity that if you educate yourself a little bit and take a more active approach with your investing and trading, you're gonna be able to mitigate a lot of that risk and mitigate a lot of that pain. So I think, and this is the strategy that I've been employing, all right? Obviously, daily time frame strategies work very well, focusing on the overall trend, treading the direction of the trend. The trend is your friend. Just building that daily time frame system. And then if you want to be a little bit more active, you're going to have to build something like a volatility system, right? Where you can monitor short-term volatility, where you can find profitable opportunities and optimize a system for that. This is going to allow you to grow your trading account, even in a bear market. Again, the trend is your friend. Trade in the direction of the trend. Trade in the direction of the trend. So that when we do reach a bottom and you want to allocate maybe your trading capital into long-term holds, you'll have a lot more of it and you're going to be able to expand your gains that way. Good recommendation. That's what I recommend. So focusing on the bigger picture and patience with your long-term positions right now, and choosing your moment is very critical here. And then utilizing this time to build a short-term volatility system. Now, you can, of course, attempt to take large directional bets. You can get lucky this way. I don't recommend this because most people do not get lucky. You're always going to read like the story. You're going to see the headline like options trader goes from $200 to $200 million, right? Using blah. And then if you look into it, the dude like had no risk management, used massive positions and had like a greater chance of blowing out his account. So because we're public here and we make these videos for the population, the general population, we have to give recommendations that are going to work for the most amount of people in the most amount of situations, right? And the recommendation that works for the most amount of people in the most amount of situations is proper trading, risk management, position sizing, systems building, strategy, statistics. That's what actually works, right? It's this crazy thing where if you do something and you put the work in, right, you see it work. And it's this cool thing because we're talking about financial markets that if you put the work in, you realize that you now have this tool that you can make money with by clicking buttons on a screen. It's fucking amazing. Pardon my French. Voulez-vous coucher avec moi? Yes, you can have this concept like, well, I'm just going to take the 100x long at 22. And if we dead cat bounce to 35, I'm going to bet it all on black down to the downside. Bro, Cephas. Yeah. I will never do that again. I'm sorry. You do not have the statistics in your favor if you do that. You just don't, right? Like large directional bets can help you grow your capital. But only for a few, lucky few. And, we're not here to be lucky. We're here to be good. That's the point of all of this. It's not to be lucky. It's not to hit it big on the roulette table. It's to be good consistently, over and over again, right? The only way you do that is by putting in the work, guys. So that's where we're at. I'm hesitant to really say that we're going to have like this magnet effect, pulling Bitcoin's price down to 22. This could have been the bottom, right? I don't want to, I don't have a super strong opinion on that yet right now. Like we definitely need to see, price action and our indicators confirm a bottom. Of course, if you are a member of the premium trading group, you're going to have access to the bottom feeder indicator. And this is what I was kind of waiting until this moment to talk about, right? So bottom feeder has successfully predicted every significant bottom that Bitcoin's had. And it works on really any financial instrument, but particularly tuned to Bitcoin. It has successfully predicted every single bottom and given you a buying opportunity for Bitcoin since literally forever. So this is our most popular automated trading system that our premium subscribers have access to. And it's just well. So I will be personally watching for a bottom feeder signal near or at the 200 weekly simple moving average. Again, for at least a bounce, I would say 35 might be reasonable. Maybe 29, We'll see when we get there. And then we'll just have to reevaluate when we get there, right? A lot of things will depend. Like this is that when we're talking about trying to get a beat on whether the market's bottomed, we do have to kind of step outside the realm of technical analysis and statistics, right? Because a lot of it is going to be based upon, what's the global macro events, like what are things going on. But none of that needs to necessarily matter to you as a short-term or even a medium-term trader, right? It will matter to your long-term portfolio, right? Whether you're looking at making that decision to put your money in to dollar cost average more aggressively, following that bounce, you don't want to miss the bottom, of course, or to stay conservative and stay stable coined up. Now, let's talk about real quickly price targets in the situation where we do experience something that we've never experienced before. The SPY does mean revert all the way down to the 200 weekly simple moving average and perhaps Bitcoin, and that would cause Bitcoin to trade below the 200 weekly simple moving average. So if Bitcoin opens and closes a weekly candle below the 200 simple moving average, then what are some reasonable price targets? Okay, 18,000 seems very reasonable to me. Okay, 18,000 seems very reasonable to me. Maybe 20,000, 20 to 18,000. Okay, that's going to be the previous market high. And again, potentially 13. Okay, potentially 13 as well. So we can kind of get a beat on this too as well by using a very handy indicator here available in TradingView, which is the volume profile, right? So we'll just use the visible range. And this is going to let us know where the most amount of people are positioned, right? This is volume by price. So we can see that we really have right here at about 9,000, okay, is where the massive defense of Bitcoin's position goes. This means that the majority of people who bought BTC bought at this price. Yes, that's all. So following market theory, if the price on their investment were to drop back down to their buy-in price, we would expect buyers to aggressively defend their positions because they don't want to go into drawdown. Okay. So now I don't personally at this point believe that that is the most likely scenario, but again, you can't just be walking around out here with no life preserver on. You need to have a plan for what you're going to do when this happens. And if this doesn't happen, then what is your backup plan? Okay. So that's where we're at. Now, we've got just a few minutes left here. My daughter does get out of school in 30 minutes, so I'm going to have to leave to go get her shortly. So I will show you now, guys, a little bit of the new system that I am working on now. So I spent a good majority of last evening and today backtesting this. Really liked my results, so I am being a little aggressive with my forward testing right now. I'm just live trading it, small capital account. I think the account is it's like $2,700, I believe, is what I'm utilizing with this account. A couple of cool indicators here. Obviously, Quadriga for my stop and target system. Now, this is a 30-minute system, okay? 30-minute system. So I am utilizing Quadriga. However, I'm using 3.5 as my stop loss multiplier and as my initial take profit, and then 7 and 10.5, okay? So looking for a fixed risk to reward ratio in the event where I hit 50% of my account. So just so you guys understand the math, utilizing 2% risk per trade, if we have the same distance from our entry price to our take profit level and to our stop loss, that means that if we took all of our profit at our take profit level, our first one here, 2% risk, we would make 2% profit on our trading account. That's how that works, right? Utilizing the position size calculator and taking the correct position size lets you know in advance how much you're going to win or lose if your trade works the same way. Now, because I and a lot of people do things a little bit more complicated than that. We actually have 3 take profit levels. So we take 50% here, 30% here, and 20% here. Some people will do 50, 25, 25. Some people do 20, 30, 50, 30, 20, whatever. A lot of cool guys doing cool things in the Discord and traders that I fuck with. So, but in the situation where we are using 2% risk and our position goes from our entry price, we hit our first take profit. At that moment, instantaneously, we've made 1% profit on our account. That's how that works. I want you guys to understand that. And then once we hit our first take profit, our stop loss goes to break even, goes to our entry price, so that if price then reverses, and I'm talking about a long here, but just flip it around for shorts. If price then reverses, we are out of our trade with no loss, and we've gained 1% on our account. Now, if we then go on to hit let's talk about, let's make this easy and do 25-25. So if we were taking 25% at target 2 and 25% at target 3, well, target 2 is twice as far as our entry price, right? So it would be 2% profit, but we're only using half of our remaining position size. So that's an additional 1% profit. So we make 2% profit if we hit target 2. All right. And then half of 3. All right. So we would make 3% if our trade went to, or excuse me, it would be 2% and 4%. So half of that would be another 2%. So that's 3%. Excuse me. We would be at 3% total profit if our trade reaches TP2. And then since our target 3 is 3 times farther, right, at 2% risk, we would be making 6% total return on our account. Half of that is 3. Okay. So we are looking to make 1 plus 2 plus 3 is 5. So we have an outsized risk to reward ratio utilizing this system. Okay. So we're looking to make 5% profit on our trade, only using 2% risk. And I think that's the way to do it. That's why I do that, right? That's why we do it that way. That's why we use multiple take profits, so that we can improve our chances to hit multiple targets, so that we can protect ourselves and make money if we only hit our first take profit, and so that we control our risk if we hit none of our take profits and just lose money. Okay. So there's a method to this, guys. There's a way to do it. Now I'm not going to have time here to, I think tomorrow in tomorrow's stream, I'll go over the system a little bit more. Just have 2 indicators here. It's a volatility based system on the 30-minute time frame. But tomorrow we'll do some more chart requests. We'll talk a little bit more about the markets, and we will attempt to answer your questions as closely as possible. All right. So thank you guys so much for coming to the stream. I really appreciate the support. Thank you for being patient in my absence, but we're going to be making some amazing content. If you guys enjoy this content, make sure to subscribe to the channel or follow us wherever you happen to be. If you're watching on Twitch, huge shout out. Make sure to give us a follow over there. Subs are always appreciated. Thank you guys so much. We will be integrating more for the Twitch and the Trovo and the DLive people like we used to back in the day. If you guys are new to trading, if you want to improve your trading, then I highly recommend come join us in the Discord. And if you're interested in improving your skills further, you can research all that we offer with our professional services and our premium trading group. It includes our buy and sell signals. It includes access to all of our proprietary indicators, our market research, access to all of our automated trading systems and bots, as well as our private members lounge and all those channels there as well. And of course, our trading academy, access to our online trading academy. So where you guys can get access to all of the courses that I've built for teaching individuals how to trade, whether it's the Pathways to Profit course or risk management or introduction. So and again, we hope to add a lot more there as we continue to move forward. So thank you guys so much. I will be back tomorrow. I do not have a fixed time of when I will be back, but we will be ironing that out as we proceed with the streaming. It's going to be juggling a lot of stuff right now. Yeah, thank you guys for everything. Be out there, trade safely, position size, guys, do things wisely, and I will see you guys on the next one. Trade safely.